Hey guys, Scott here from Scott Phillips Trading, and this week I am showing you the failed breakout system. It's an intraday FX system, and in the links to this video I'll have the daily emails that I've been putting about the system rules so far, so you should have a good idea of it. Now, this system seeks to solve the biggest problem that we have in intraday trading, is that every day is different. You know, some days you have a strong trend day, some days you have a mean reversion day, some days you have trend continuation, some days you have trend reversal, some days it's choppy, some days it's clean, and by definition, any strategy that works on a nice, clean, smooth trending day is going to get chopped to pieces in a choppy day, and any strategy that works well on a choppy day is going to lose like an automated losing machine on a trend day. So what are we trying to do here? We're trying to have a market classification mechanism that we can find days to trade that are going to behave similarly. So if we're dealing with the same thing every day, if we're dealing with a market that's behaving the same, then the intraday price action is probably going to behave very similarly too. So we can ramp our odds up through the roof. So anyway, once again, what we're doing is we've got a weekly chart, a daily chart, a 240-minute chart, a 60-minute chart, a 15-minute chart, and a 5-minute chart, which we take the entries on. So we're using all of these ones with the weird lines on, and to choose our daily victims. So we have 3 moving averages here, and moving averages don't really mean anything. These are just a useful color coding. So we have a blue one, which is an 8, we have a purple one, which is a 21, and we have a red one, which is a 50. Now these don't mean anything at all. You could put your own in there. Alright, so what are we looking for? We're looking for at least 3 out of these 5 markets to be blue above the purple above the red, and we consider it trending. So here you can see we've just switched into trending mode here, and on the daily chart, which is the most important, we're in the early stage of a fight back from there. So this is potentially a move that's going to recapture, and we should at least get 1 day of trending out of this. The weekly looks the opposite way, with the blue below the purple below the red, but it's showing signs that that may be reversing. So we have 1, we have 2, we have 3 trending markets out of the 5. So technically, this one has. Met our criteria. So we're going to mark AUD CHF down. Now, what are we looking for now? We are looking for a 240-minute chart which is close to the 8 moving average. So here we are a little away from this blue line. So this is not a particularly ideal setup, but still within the bounds of acceptable. We're looking for a 60-minute chart that's somewhere between the blue line and the purple line, and we've got it here. So that's not too bad. So this isn't the ideal chart by any means, but it's an acceptable risk-reward trade, and we're not trying to know the future. We're just trying to get an acceptable risk-reward trade. So if I was awake at the computer, we have to draw a horizontal line as best we can. So if we were at the computer, I probably would have drawn it somewhere here or here, probably here, something-ish, maybe here. And what we're looking for is a break of that line and then a recapture. So if we were sitting at the computer, which I wasn't, we would have entered here with a stop a few pips below there. But instead, we are looking for another horizontal line here. So I'm going to leave this line here at 74.72, and the low here is 74.61.5. So what we're looking for now is another false break of this of this line, and then we re-enter on its recapture. So we're going to add Aud CHF to our watch list, and we're just going to keep moving down through the day. So the weekly is trending down. You see blue, purple, red. The daily trending down, blue, purple, red. The 240 is right on the 8 EMA, and this is between the two. This is a nice looking setup. Now, let's look a little closely. We have a market which has tried to go up and failed to go up here. It may rally a little more. Let's have a look at what it's doing. Okay, we have a shooting star up here and an inside period. If you were taking the mechanical entries, the break of this low would have been a perfectly acceptable entry, even though you wouldn't be in profit. So we load up our Aud Cad, and what we're looking for is the best horizontal line of support. So we might have to play around with it a bit to get what we want, and we're looking for the recent support. I have a preference for using highs and lows and opens and closes to highs and lows, but here we have 1, 2, 3, 4, 5, 6, 7, 8 touches of support there. That's probably a pretty decent support line. So what we're looking for to take this trade is we're looking for a break above here. We're looking for a break below there, and then we will enter right at the green line. Okay, so we're going to put Aud Cad down on our watch list. Moving down, we're going to look at Aud JPY, and we can see the weekly is trending down, the daily is not trending down, the 240 is trending down, the 60 is trending down. So we technically have all the right requirements. Now let's look at the daily, seeing it's the most important. We have a market here that is in a short-term trading range. If this falls, it's likely to fall a fair way, but it's by no means certain that it's going to fall. This one could work, but it's not ideal, so I would probably skip that, given that we've already got a number of AUD crosses. Okay, we have the 240 trending up, we have the daily doing nothing, and we have the weekly trending down. That's a clear case of something we want to stand aside for. Okay, here we have the daily strongly trending down, 240 is trending down, 60 is trending down. The weekly is not quite trending down, but that's because the moving averages are lagging. We can say reasonably that this market should test this low here. And yesterday we had a failed attempt to drive the market up. This is looking interesting. So let's look at our 5-minute line. Okay, here we have 1, 2, 3, 4, 5 closes in a row and a high. We've got 6 points of touch, 7 points of touch, 8 points of touch. This is probably reasonable support. So what we're looking for to enter this trade is a breakout and a breakdown. Okay, so we'll add AUD USD to the list. Now, I want you to notice that we have 3 Aussie crosses in the list so far. That's not particularly cool because they're all the same basic thing, right? They're all heavily correlated, they're all the same thing. Let's take a look at what we've got. Okay, we've got CAD CHF. I looked at this trade yesterday, which would have worked. Okay, here we have a market which is trending up on the daily. The weekly, it's doing nothing. The 15, the 60, and the 240 are all trending up. This is a nice market to trade. This is a little overextended from the ADMA. These are better risk points around here and around here, but not terrible either. So what would I look to trade this market? To be honest, I already would have entered that line. I would have already entered this market probably at this point here. I would be very comfortable entering the market at this point here. So we have a situation where the move is already kicking off. I'd probably place a limit order if it pulls back to here with a stop here. Now, we're doing a filtering process here. I'll add CAD CHF because we can't follow too many markets without losing performance, which is a very interesting phenomenon called span of control. Okay, so CHF JPY. We have a market that's trending down, but it's approaching support. The 240 is way outside, even though it's trending down. These are trending down, trending down. The weekly is trending down as well. Okay, so this is a market that's trending down on every time frame. If we look at the daily, though, it's not ideal. We could be transitioning to a trading range there. That would be an example of one where I'd use discretion to probably stand aside from it. Okay, the weekly, we have a very strong trend. The daily, we have a strong trend, but we're starting to pull back. The 240, the trend is now changing, and the 60-minute and the 15 are down. So we only have two time frames trending, so we stand aside. Aud Cad is next. And we have a strongly trending market on the weekly. Up. We have it trending down on the daily, down on the 60. No, that's enough for me to not be interested in that market anymore. We've got a lot of conflict between the timelines. One of the things that you really want to stand aside from is where one time frame is trending one way and the other time frame is trending the other way. That's just a recipe for disaster. It's a recipe for choppy markets and cross currents. Okay. EUR CHF, we've got strongly trending on daily and weekly. The weekly was a little overextended. It may have worked some of that off. It's at a nice support point. This could go either way. This is not bad. So let's look at the 240. It's survived a pullback, and now it looks to be ready to go again. What would I look for here? I don't see a clear point where we have horizontal support. So this is a situation where the markets are all lined up, but the short-term price action is a little bit higher volatility than we'd like. What we really want is a very tight, low volatility pattern. And this is a discretionary system, so we're trying to apply some discretion. This recent price action is not particularly clean, and so if it's not particularly clean, the odds are strong that it's going to continue to be not particularly clean. So I would steer clear of this one, and we'll look at the next one. On the weekly, it's a choppy mess. On the daily, it's just turned down. Choppy mess. It's down. Choppy mess. Yeah, this is not the market that you want to trade. So EUR JPY. Okay. Choppy mess, nah, next one. And even though I'm going through this in detail, what we have here is a simple visual situation where you can go, okay, weekly is up, daily is up, but overextended on the daily, a long way from the moving average. There's every chance that this could pull back or paint a retest and change. It's still up on the 240, but we're starting to see some selling pressure here. and it's down on the 60, down on the 15. Even though this is technically acceptable, when we look at the 5 minute, again, we see a lot more volatility than we'd like to see. What you don't want to see is big candles, because big candles mean that you have to place wide stops. Wide stops are more risk, smaller position sizes. It's not the worst setup I've ever seen, but honestly, I would skip that one. Okay, Euro USD. Okay, this one is trending up, but you can see clearly here, if we apply some sort of price action to this, it's changing trend. This is one that I would be very clear of, very wary of, because 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 weeks we've gone sideways without going up and then breaks down. Nah, this one's done. So our daily chart has just started to trend down. Our 15, our 60, and our 240 are down. This is actually a nice setup for trending down. Okay. Okay, so let's look at the 5 minute chart here. Now, this is more like we want to see. Sorry, a bit retarded this morning. So yeah, I think I probably should have been at the screen a little earlier, and this would have been the entry point here. So if you miss it, what do? You have a couple of options. You have the option to place a limit order here and hope that it comes back, which it would have if we were paying attention. I'm a little bit late on doing this today. Okay, so at this point, I'd be tempted to jump in because it's starting to fall off the plate here. Yeah, I would consider jumping in. So we're going to put Euro US dollar on our watch list. Okay, now you can see here we've got 1, 2, 3, 4, 5, 6 on our watch list today. There are 5 on our watch list so far. There's no way you can follow that many. There's no way you can follow that many markets. So what we're going to do is go through them all and then find the best ones. Okay, so here we have uptrend on daily, uptrend on weekly. If this one breaks up, it's probably going to run quite a while, but it's by no means certain of breaking up. So we have an uptrend here, we have a downtrend on the 15, we have an uptrend on the 60. This one is not bad. This one is not bad, but you're placing a bet on the uptrend. So how would I trade this? Because bets on speculative things, a break above here, which is going to run it up, are speculative things by definition. I would, instead of taking the 5 minute trade, I would take the Crazy Ivan trade here, which is to go long on a break of here with a stop 1 tick below the low, and that's from the Crazy Ivan system in the setups toolkit and the system building masterclass. We've got a significant low, the lowest low in a number of bars. We've got 1 or more higher closes, 1 or more lower closes. So we go long on a break of here with a stop here. So we'd be long at 18841, and our stop would be 18382.5. And you can see that a wider stop gives us a higher win rate for what is a speculative trade. So personally, I wouldn't be looking at taking that on the failed breakout system. So I won't add that to the scan. Okay, Gbpc O2f is next on our list. Okay, daily is nice. Weekly, that shooting star is a little worrisome, but it seems to be rejecting it. 240 is nice. 60 is, wow, really perfect. The 15 is, and the 15 is nice. Okay. Can we place a nice line? The most logical place would have been about here, and we broke it down and broke up to it. If I was at the screen, I would have taken this trade right here. So if I want to take this trade, I would change that to be a limit order here at 137.62 with a stop just below here, which is 137.41. So I get a 19 pip stop, which is quite wide for the system. Yeah, I would take that trade. So I'm going to add Gbpc O2f. Now, we're getting too many to follow here. Okay, again, these are all the same. We have down, down, up, up. This is quite conflicted with this bearish-looking price action here. This is one that I would stand aside from. Let's look at GBP USD. We have a market which is still trending up because the moving averages are lagging, but the price action is starting to switch. The daily chart is still a choppy mess, and the 240 and the 60 and the 15 have got in gear. So this is technically a market which is trending down. You could certainly take this inside period right here and go short here, stop here. Let's look at NZD JPY. Okay, here we have the market is trending down. It's trending down in a low volatility way, which is a little concerning. It's trending down here, but it's far from clear. This is a trading range. It's trending down. It's trending down. So this, this is an acceptable. This is an acceptable trade. Subjectively, we've probably got enough. It's probably not. It's probably not. It's probably not as clean as some of the others. So NZD USD, we have the same thing. So we're nearly to the bottom of our scan, and we've got way too many markets to follow. So at some point, we have to start culling the herd. So here we have high probability of continuation. We have market trending down on every time frame, and this is clearly broken support. So what we're looking for is we have 1, 2, 3, 4, 5, 6, 7 points of resistance here. We're looking for a break of resistance, and then back to here before we enter with a stop above wherever is the spike high. So let's add NZD USD. USD CAD. No, this is choppy and messy. Choppy and messy, choppy and messy, choppy and messy. Here we only have 2 time frames trending. Let's move on to USD CHF, which is nicely trending up on daily. The weekly is turning over. Okay, this is an acceptable trade, but we are quite a long way from the moving averages and really overdue for some sort of intraday pullback. This is where the discretion of the system comes in, which I'm going to be covering in the webinar next week. I would skip that one. So USD JPY is the last one we have. It's trending up, trending down, choppy mess, but trending up. This one is trending down. So you could make a case for this one, but it's not the cleanest, and we just have so many setups today that we need to be a little vigilant. So going back again, what have we got? We've got USD CHF. Okay. And you can see here, we drew that line before, we've crossed it down, we've come back up, so we would enter here at 74.72 with a stop below here. That's how we trade this. Okay, what's next? Aud Cad. You cannot take both Aud Cad and Aud CHF. They're the same basic trade, and we can see here that our line has not been threatened, so we're out of that so far, but we keep an eye on it. AUD USD. Our line has not been touched. Our line did not get touched. We're still waiting for that, so nothing to do there. CAD CHF. Okay, we're waiting for a touch of here to enter on a limit. We keep an eye on that. We've got Euro USD. We have entered, and then it's fallen off the plate. So we're short Euro US dollar. So you can see in the last 5 minutes while we looked at the other markets, we rallied, hit this point, and then fell off the plate. Now this is an ideal place to set up. So we would be short there. Where would our stop be? We have no clear place to stop except for all the way up here, which is too high. So in that instance, we're entering at 121.08, 121.18 is probably about right. So we'll take a 10 pip stop, and experience tells you that we're looking, an ideal stop distance is about 1.6 times the ATR, so let's look at it. It's probably going to be about 12 pips. Okay, so oh, 17.5 pips. So yeah, no, so I'm wrong. So an ideal stop distance is probably going to be a lot higher than that, up to about there or so. Okay, so we have a trade in USD, in Euro USD. At this point, we've probably got too many markets to watch. So I would be culling the markets which aren't ideal at this point. Now let's just check Gbpc CHF to see how ideal that is. It's not bad, but once we have trades on, we can't take any more trades. Okay, NZD USD looks like it's about to break there, so we'll keep an eye on this one. Now, there's some critical things to note, which I hope the scan process has brought up. And some days you'll have hardly any setup. Some days it's famine. Some days it's a banquet. And today it's a banquet. We have setups across the board. We could have taken 10 different trades today between the 240-minute mechanical setups and between the 5-minute discretionary setups. But one thing I want to make very clear to you is that any FX trade that you enter at around the same time, even if the markets are not correlated, are implicitly correlated. So EUR NZD is absolutely correlated to NZD JPY right now, because everything that happens at about the same time is correlated. That's just the annoying fact. So the way that we do this is that we have a hard maximum of 2 trades with open risk. Now what that means is that once your stop has moved to break even or better, you're allowed to take an extra trade. But if both of you, you're allowed to take 2 trades maximum until you move the stop to break even on one, and then you're allowed to take 1 more. which brings you up to a maximum of 3. Now, what we're trying to avoid by this is a situation where we have 3 trades simultaneously on and all of them lose simultaneously and they wipe out your day's profit or they wipe out your week's profit. So that's what we're trying to avoid. And yeah, it took me 30 minutes to do it today in a lot of detail. Ordinarily, I could do this in 10 or 15 minutes. It's not a big deal. Hope you enjoyed the video. If you enjoy the video and you want to learn more about the system, if you want to learn the exact rules of the system and go through it in a lot of detail, I'm holding a webinar, and let me just put up the URL for you. Okay, this is scottphillips.clickfunnels.com/May-webinar. That's scottphillips-clickfunnels.com/May-webinar. Now, in that webinar, I'm going to be showing you exactly how to practice a discretionary system like this, where you have a lot of freedom. I'm going to show you how to work it up and get it from paper trading to real money. I'm going to show you how to log your trades. I'm going to show you how to monitor your performance. And most crucially, I'm going to show you the difference between a good discretionary trade and a bad discretionary trade. I'm going to open the curtain and show you everything I know about this system, and it'll be really interesting, and I hope you're there. Okay, thank you.